This video is brought to you by BlackNote Investments, the equity research platform where you can find all the necessary data for company valuations. The electrical equipment industry involves developing and manufacturing electrical devices, which rely on electric energy, AC or DC, to operate their core parts: electric motors, transformers, lighting, rechargeable batteries, control electronics. The electrical equipment industry is further divided into 8 sub-segments, each serving the specific needs of residential, commercial, and industrial environments. Analyzing the 4 main segments, the relay and industrial control manufacturing category involves the manufacture of relays and industrial controls used to regulate and manage electrical systems in various applications. Products in this category are essential for the automation and control of electrical circuits in industrial, commercial, and residential settings. These products are used in industrial automation, in manufacturing plants to control machinery and processes, power distribution for controlling circuit breakers and other electrical equipment in power plants, building automation like HVAC systems, lighting control, and security systems within buildings, transportation such as railway signaling systems, automotive control systems, and traffic light control, and to control home appliances. Major markets targeted by relay and industrial control products are discrete end markets: automotive, semiconductor, hybrid end markets, food and beverage, life sciences, and process end markets, oil and gas, mining, and chemicals. The switchgear and switchboard apparatus manufacturing category involves the manufacturing of switchgear and switchboard apparatus, which are essential components in the management, protection, and control of electrical power systems. These devices are crucial for ensuring the safe and efficient distribution of electrical power in various applications, from industrial to residential settings. These products are used in power generation and distribution to manage and distribute electrical power, industrial facilities for controlling and protecting electrical systems in manufacturing plants, refineries, and other industrial settings, commercial buildings to distribute power and protect electrical circuits in office buildings, and in residential buildings, switchgear and switchboards are used for power distribution and protection in homes. The power, distribution, and specialty transformer manufacturing category involves the manufacturing of transformers used for various applications in power generation, transmission, distribution, and specialty purposes. Transformers are essential for modifying voltage levels to meet the requirements of different stages of electrical power systems, ensuring efficient and safe power delivery. These products are used in power generation and transmission, used in power plants and to step up voltage for transmission and step down voltage for distribution. Industrial facilities, used to power machinery, motors, and equipment, ensuring the right voltage levels for various industrial processes. Commercial buildings, to provide the appropriate voltage levels for lighting, heating, ventilation, and other electrical systems. And in residential areas, pole-mounted and pad-mounted transformers are used to supply electricity to homes and residential complexes. The motor and generator manufacturing category involves the manufacturing of motors and generators used in a wide range of applications across various industries. These products are essential for converting electrical energy into mechanical energy, motors, or mechanical energy into electrical energy, generators. These products are used in industrial facilities to power machinery, conveyors, pumps, fans, and other industrial equipment. Automotive electric motors are used in electric vehicles and hybrid vehicles, while alternators are used in traditional internal combustion engine vehicles. Commercial and residential buildings to provide backup power during outages, and renewable energy generators are used in wind turbines and hydroelectric power plants to convert kinetic energy into electrical energy. Despite the presence of companies vertically focused on just one segment, more than often companies in the electrical equipment industry tend to operate in different segments to better satisfy their customers' needs, benefiting from the synergies that products from different segments can generate. Given the presence of many companies able to compete in different segments, it is not surprising that the electrical equipment industry is highly competitive and fragmented, registering a Herfindahl-Hirschman index of 0.02 or 229.5 points. The Herfindahl-Hirschman index is used to measure the level of competitiveness concentration in an industry with HHI below 0.15, indicative of unconcentrated or very competitive industries, HHI between 0.15 and 0.25 indicative or moderately concentrated industries, and HHI above 0.25 suggesting that industries are highly concentrated or scarcely competitive like oligopolies. From 2013 to 2023, the industry's revenues grew at a CAGR of 6.5%, increasing 1.9 times from 405 billion to 764 billion. As of the end of 2023, the industry's operating margin stood at 8.9%, reflecting a better performance than the industry's 10-year median value of 8.4%. The total operating profit was 67.7 billion in 2023. Looking at other measures of profitability, in 2023, the gross margin sat at 24.9%, worse than the median value of 26.8%, while the free cash flow margin was 3.1% in line with the past decade's median value of 3.1%. Collectively, in 2023, the free cash flows to the firm registered a value equal to 23.5 billion. As regards solvency ratios, the debt-to-enterprise value ratio for the electrical equipment industry is 8.7%, while the debt-to-equity ratio is 35.7%. The interest coverage ratio instead, showing how much the operating income covers interest expenses, is equal to 6.23, which would translate into a credit rating for the electrical equipment industry equal to A+, based on Moody's rating standards. Finally, the unlevered beta of the electrical equipment industry, which is the beta depurated by the debt leverage, has been 0.73 for the past 2 years and 0.85 for the past 5 years. Despite the electrical equipment industry is a mature market, with revenues growing around the mid-single digits range, over the past years, the industry has witnessed the rise of secular trends that will likely support the future demand for electrical equipment devices. The rapid evolution of large language models and AI is revolutionizing various industries. The need for extensive computational resources has led to a surge in demand for data centers, which heavily rely on power and cooling solutions to guarantee continuous operation. Future data centers will likely incorporate advanced power and cooling technologies to meet the increasing demand for high computational capabilities. The rising concern for climate change will force firms and governments to focus on replacing traditional energy sources with renewable ones, increasing efficiency, and promoting circular economy practices in the next decades. Thus, buildings and industrial facilities will have to undertake structural changes, pivoting towards greater energy efficiency. Advanced electrical equipment devices able to efficiently manage the flow of energy will likely play a key role in the achievement of such goals. Smart buildings equipped with connected products and applications are becoming essential for energy efficiency and improved living standards, leading to an increasing need for real-time monitoring and management of energy consumption. The push towards electrification and decarbonization is reshaping the energy landscape, leading to the implementation of smart grids to manage energy distribution efficiently and integrate renewable energy sources. Advances in battery technology and other energy storage solutions to ensure a stable energy supply, and increased adoption of electric vehicles. Electrification and data proliferation are creating opportunities in both developed and emerging economies, favoring the creation of new wealth. The rise in countries' overall wealth will create the necessity of upgrading infrastructure in mature economies to meet citizens' needs for greater quality of living and concerns on sustainability, and building new infrastructure in emerging economies to meet the growing needs of the developing industrial and service sectors. The aftermath of the COVID pandemic and the outbreak of the Russian-Ukrainian war exposed the inefficiency of supply chains, forcing firms and public institutions to take action to avoid similar economic repercussions in the future. It resulted in global supply chain shifts and reshoring trends, followed by an increasing focus on automation and electrification, which culminated in greater reliance on robotics and application of intelligent devices for manufacturing processes, thus the integration of IoT and AI to create highly automated and efficient manufacturing facilities. To capitalize on such opportunities, over the past decade, collectively, the industry registered a median reinvestment margin of 4.4%, which comprises investments made in capital expenditures, R&D, and acquisitions. In terms of efficiency and return on investments, the electrical equipment industry's median sales to invested capital in the period 2013-2023 is equal to 1.39, meaning that on every dollar invested, the industry generates 1.39 of revenues. Combining both the reinvestments made through the past decade and the industry's ability to generate a return from the investments made, the 2024 expected growth rate for the industry is 5.82%. A detailed explanation of how we came up with the industry's expected growth rate, as well as many more useful industry data, can be found on my website BlackNote Investment. By 2033, the electric equipment industry revenues are expected to reach $1.25 trillion, increasing 1.6 times from the $764 billion registered in 2023 at a CAGR of 5%. We projected the industry's expected revenues 10 years from now, applying the expected growth rate of 5.82% and allowing it to slowly decline as the industry approaches the economy's perpetual growth rate, represented in this case by the USD risk-free rate. The industry is highly competitive, and no company has a dominant position. The following table provides a snapshot of the top 45 companies in the electrical equipment industry, accounting for 75.2% of total market share by revenues. As regards the segment in which such companies operate, the relay and industrial control manufacturing, and the switchgear and switchboard. Apparatus. Manufacturing are the two most competitive segments, with respectively 17 and 14 companies among those firms that account for 75% of the industry's total revenues. Following, we have the power, distribution, and specialty transformer manufacturing and the battery manufacturing segments, with 12 and 11 companies respectively. The motor and generator manufacturing instead appears to be less competitive, with only 5 major companies operating in the segment. Looking at the geographical distribution of firms operating in the industry, China is by far the single country that accounts for the majority of firms, with 14 companies, followed by the USA with 7 companies, and Japan with 6 firms. Basing our assumptions on analysts' expectations and industry trends, we have estimated the future market share by 2033 for the top 20 companies operating in the industry and how their market position will change compared to 2023 levels. If you are looking for financial data to support your valuations, on BlackNote Investment, you can find the expected growth rate for 37 different industries used to forecast companies' future revenues. Additionally, the site offers useful data such as equity risk premiums for 39 different countries used for calculating discount rates, as well as expected earnings growth rates for those countries based on analysts' expectations. Detailed industry and sector reports are also available, containing data like total revenues, total free cash flows, median operating margins, return on capital, as well as beta and financial ratios used to assess companies' risk. Feel free to use them in your analysis.